Hey guys, it's Ronnie. It's Thursday evening, June 18th, and today I'm going to give you a market recap as well as a couple of potential trades for the longer term that we're looking at for possible entry points. We'll start with the S&P 500, go on to the trades that I took or closed out today, and then, you know, finally go into trades that are potential watches for the long term, meaning either next week, week after, in the months ahead, even just kind of trying to position properly for some of these trades as they come to a good buying point or selling point. So here is the S&P 500 chart. You can see on the right side, I've zoomed into the daily on the S&P 500. I think we've gone over quite a bit where we are in the long-term view of this market. Just to confirm that, we are keeping an eye on this complex trend line, which goes back to January of 2018, as well as this ascending trend line, which starts at the base of the bottom of the crash here in March. So that pivot starts there. I mean, that trend line starts down there, pivots at the May retracement, and then we are here in June where we're looking at kind of the action right around that trend line right now. So what we're looking at is, again, the purple trend line as well as this red trend line right here. And I'm really looking for this market to stay below this red trend line. And I'd like to see it below the purple trend line, because if you take a look on the daily and I zoom out a little bit more, that's really, where we'll see if we get below here and stay below here again, we will see probably a little bit more, decline in the markets and pull back to more reasonable levels, in my opinion. It may not get there, though. You can see today it actually bounced off that trend line. If you look on the left side, we see a 5-minute chart intraday. Granted, it was a pretty choppy day, but you can see first thing in the morning it actually started gap down, bounced on that trend line, and then just has been chopping in a pretty wide range ever since then through the end of the day. So whereas overnight the markets were down quite a bit, they actually around the European Open started getting some support and didn't open as bad, as weakly as I thought they would because of the support that came in towards the 2 a.m. time frame. But if you look on the daily again, we're looking for it to at least stay below, definitely stay below this island reversal up here, which we have a line drawn at the gap fill for that particular reversal. So if it happens to continue to bounce here going into Friday, which is options expiration and quarterly, the quarterly end as well, the quarter end. So there is volume around that time frame. And if it does happen to bounce here and make its way up, into this area, it's okay as long as it either stays below this pivot right here of 3182 area, or it can even go as far as this descending trend line from the all-time high. You can see this trend line is from the all-time high to the more recent high. So if it can stay below that, I think, we're still in the medium term looking for a little pullback in this market. Granted, we did get one on last Thursday, but looking for, really this is just kind of consolidation from that move. It is wild, but that's because volatility is high. Volatility is still in the 30s. So you're going to see wider moves, and more of a, kind of back and forth, and it can be in very big ranges because of volatility. That's what volatility does. So looking here at this trend line, the ascending trend line, it's still below here right now. So right now we're just going to keep an eye on this trend line and see if it can stay below this, as well as actually I'm going to go ahead and put a price level here at this the day before yesterday's high of 3154-ish. where we, would like to stay below that too. So first hurdle that we'd have to get over is this, the high from the 16th, and if it pushes above that, it could fill this gap, and then beyond that, it could, fill up to this descending trend line. But again, still kind of maintaining the thesis that, we're in a bear market bounce, pretty choppy, and I'm looking for a little pullback going into the summer. I mean, we're in the summer, but continuing into the summer, I would be looking for a pullback, especially as we go into the earnings season coming up in the next several weeks. So the big banks' earnings and other larger company earnings for the quarterly, the second quarter earnings will be coming up soon enough. So at that time, we could potentially see a lot of wild moves in the market and probably a little bit of a pullback. So that's what I'm looking at overall in the S&P 500. Again, it's still kind of in the middle of a range here. We're really looking for some confirmation below this purple trend line, and for it to stay in this wedge here at the worst for the upside. All right, so that's the S&P 500. What I will start going over the a couple of trades that we talked about in previous videos. So Carnival Cruise Lines was one of them, which actually had a really big down move in the after hours and pre-market because of earnings. So we held, was holding that option, those options in Carnival, and ended up getting out of them first thing in the morning, which turned out to be really good because they actually it moved quite a bit in the pre-market here and bounced, and you could see that it had kind of a tail here, a bottoming tail, and it was ramping up into the open. So if you take a look at how it opened, you can see it actually went down a little bit, but then just, was so strong. I sold it first thing. I mean, I usually give myself a little time because option pricing tends to be a little bit shaky right on the open. But I could already tell this thing was showing some relative strength here as the market was declining, actually. This was ramping up. So I wanted to get out as soon as possible. And actually, I was able to get out within that first 5-minute bar there for a profit. So got out of Carnival. I've had it for a couple of days. For those of you who may not have seen other videos, I had bought it prior to earnings for actually an earnings play to the downside. Had a little bit of a hiccup here with some moves, to the upside there a couple of days ago, but waiting for earnings turned out to be the right move for me because it did actually weaken considerably on those earnings, which were expected to be bad, but much worse than expected. All right. So I'll also tell you about what's going on with INDA, which is the India ETF. My stop on this one, I'm still holding this short, and my stop, as I mentioned, was this June 16th high, and I have a red dashed line here, so you can easily see where my stop is. It did not make it there today, and it's still kind of hovering around this trend line. It closed right at it, actually, the trend line that is from the March lows. So I'm looking for it to hold and potentially, retreat back from that trend line. Now, granted, if it doesn't, because we do have a 20 moving average here as well. If it tends to, just kind of consolidate here and not go below this 20 moving average or even below this June 16th low, I mean, I'll consider getting out of it for like a very minor profit. But right now, I'm holding it. My expectation on INDA, or my hypothesis, I guess, on this trade is for it to come back below the low of the 16th and actually back down here to this 2676 area, or at least this 50 moving average at 2678. So that's what I'm looking for in INDA. Still holding it, so nothing really to update there. All the rationale for the trade was given in the prior video as to why I'm looking to short INDA. So those were the two trades that I was in coming in today. coming into today. And then in this morning's video, I actually put out a video very early this morning to just give a quick earnings trade opportunity as well as some other updates. So I did talk about Kroger, which I actually this morning was talking about going along Kroger over a certain area if it got there, and if it didn't break down below the overnight low, which was this blue dashed line at 32.30. So Kroger earnings came out, and they were actually pretty good, but the stock declined. So and it didn't get. If you look at the daily on the right side, we were looking at it did not get below the prior day's low in the overnight session. So this little tail right here, the Kroger managed to stay above that during its decline in the overnight session, which is the pre-market session this morning. The earnings were reported pre-market today. So what my trade was going to be was if it was able to get to hold this line, this 32.30 line, which is the overnight low. If it was able to hold this, I was going to trade it for kind of a pop all the way to the 33.79 area, 33.74 area, or at least over. I mean, if it just depended on the action. And my statement was this morning that if it shows strength, I was going to buy it because I think Kroger in the long term is a good play. It's actually got great fundamentals and a story with the whole stay-at-home economy. People are shopping quite a bit and using even shopping services like Shipt and Instacart to take advantage of that. And I feel like people are buying more groceries now than ever before. I know I am. So it didn't work out actually, and I actually put a note. I added a comment to my video this morning that it could be an actual short below that 31.45 level, which was the this pivot right here, this 31.45 pivot right here, which was actually, if you look at it on the daily, it's this area of consolidation, right? So let me put it on the weekly. Actually, you can see it a lot better there. So here's a weekly chart on Kroger, which is a little bit of a mess. And this area right here, that's kind of an area of consolidation for Kroger. This whole this mess right here in the gray box. I was really looking for the potential to short. What I was noticing rather was the potential to short it below the prior low or below the consolidation area, which it actually gave a good signal to do that in the morning. So if you look here, it showed weakness on the open. It didn't actually show any strength. It actually was weakening into the open. Never went above that first 5-minute high. So that's usually my signal: buy above or below, buy above, sell below the first 5-minute bar. You can see it never made it there, and as soon as it went underneath the prior day's low, you had a couple of ways to trade it. You could be aggressive and trade it below the first, below the prior day's low here at 32.18, or which is what I actually took the trade on. I took a trade of shorting it below this last little area, where it bounced in the 31.45 area. So right here in this area of congestion where it came all the way down to that 31.45 area, started bouncing, kind of consolidated a little bit, and then went lower. So as soon as it broke back below this 31.45 area, actually it was right here at 31.40 where I took the short, and I actually anticipated it to go a little bit lower than it did. It didn't make it all the way down to this pivot here, the 30.06 to 30.30 area, which is really what my first target was. But I was able to get a little bit of a dollar profit here, coming down into this low of the day of 30.65, and you can see here, if you look at it, it started basing around that area. It actually started making a cup. A little cup formation. And if you look at it even this way, you can see these are higher lows coming up. So I actually got out of the position around here about 2 o'clock in the afternoon Central Time, 1:30 or 2 o'clock in the afternoon as it was coming up from this low. Because you can see very clearly that, here's, there's this low here, then you have the low of the day, then you've got this this low here, and then this low here. And these are all, this is like a, first of all, this is like a secure low, a low bookended by two higher lows, and you can see it more clearly, I think, on the 15-minute. Yep, so you've got these lows here, then this 3065, which is the low of the day, and then the higher low, and as soon as it came up above that high, the third higher low, I guess, second higher low, in this area right here, that second bar is where I sold out of it. So I was able to get, a good little profit there between 30.90 and 31.40. So not a full dollar actually, but sizing up my trade, it worked out pretty well. Kroger again, and so this move actually in Kroger, thinking about the future, maybe not tomorrow or day after, but thinking about the future, which is, I'm looking for it to break out, which is what I said this morning. I'm looking for it to break out above this downtrend and this downtrend here, descending trend lines, and go higher. I think Kroger's going to go much higher in the future. So what I'm really looking for is an entry point. And so my entry point is going to be, as it breaks through those levels. And you can see here, I don't know if it's going to, but I would like it to be above really this descending trend line before I put any money to work. So looking for a breakout of this trend line here, the more, the less steep of an angle, and that will, probably bring in some new buyers. Definitely want to buy more over 33.74, and I'd probably add more. So if I would definitely buy the breakout, buy more over 33.74, and then even potentially buy more over this 34.50 area for a move up to this 36.84 high and even higher down the road. Again, this is a longer term trade for me and Kroger. And I'm not getting into it tomorrow, like I said, but that's what I'm looking at in the long term. It looks like it's curling over here, right? It could easily come down to this pivot here of $30, which is also a round number. It could do a little bit of chopping and then go up. So we'd have to really see how it acts. But overall, it's a pretty good stock. I would anticipate higher prices going into next year, even later in the year into next year. So that's Kroger. And then finally, we can go over TLT and gold and kind of where those two are, because those are some other trades I'm looking at. TLT is basically just bonds, so we'll talk about bonds in the sense of ZB, which is the 30-year. And this is a weekly on it. Still looking for it to break above this area, which is the prior week's high. Really, this area here, it needs to break out of for me to get positive on TLT, which is the ETF where you can buy bonds. And so if you take a look, we can even put like a trend line here to see as well how it works. It's kind of there now, but this rounded top pattern really has to be broken for me to think about getting into it, which means it's got to break above these highs right here. And really, I would like it to get above these highs also in this area, 183.02. So we'll see. It has the potential of just chopping around or even going a little lower. We'll have to see how it acts. But the Federal Reserve is keeping interest rates at zero, so really this should ultimately go back into this area at least. So that's what I'm looking for in bonds. And then in gold, lastly, still consolidating. This is a weekly chart on gold, still in this consolidation chop range. but I am looking for it to break this descending trend line. And first target would be this 1789 area, and then onwards. I anticipate it may even duplicate this size of a move from that 1500 to 1700, so maybe another 200 points in the long run. But I mean, that's just, it doesn't have to be today, tomorrow, next week, next month even. Definitely looking for it though. You can see it's just an area of consolidation, and it's bull flagging if you want to think of it that way. And it has this wedge that it's also in, which we will be keeping an eye on for a breakout. So that's what I'm looking at for gold, for bonds, for a couple of stocks, and then the market as a whole. I'll be sure to post any other ideas I have. If you guys are interested in knowing when my next video comes out, just subscribe to the channel. And happy trading, everybody. Have a great day and a great weekend.